Hi, it's Michael Farr from Farr, Miller in Washington. We got some very important economic data today. The unemployment news was really good. There were more jobs added over the past month than most people had expected. We saw an increase of 243,000 jobs. That was up from December's 203,000 and well above the 140,000 estimate from most economists. So markets were very pleasantly surprised. It didn't look like there was much monkeying around with the size of the job pool at all, so this looked like a real number. I'm feeling pretty encouraged about this. Moreover, they showed an additional 0.2% increase in hours worked. So more people back at work and an increase actually in the hours worked, which is another very healthy sign. The bond market reacted and yields went up. It is going to be very hard for the Federal Reserve to hold to their promise of keeping rates at 0% or so until late 2014. So it looks like now interest rates moving a little bit higher, 1.93% on the 10-year. That's up almost from 1.75% a couple of days ago. So those higher interest rates means that the banks suddenly have more room to make money, meaning borrow at 0 and lend at whatever the rate happens to be, almost 4.75%, 5% on a mortgage. So they've got better margins at banks, and bank stocks are rallying today because it looks like, again, that interest rates may move up and the economy may be getting healthier. It could be a head fake. I'm not willing to sound the all clear quite yet. We've seen a couple of 100,000 gains before in the jobs number, and it has reversed. The news out of Europe that they're somehow coming to terms with Greece is encouraging. It is going to be a struggle for Greece to stay in the European Union and for that union to stay whole monetarily while they write off a whole bunch of Greek debt. Still struggles there. But here it kind of looks like all of the quantitative easing, all of the stimulus that was intended to get the patient through, to put them in that state of stasis, keep them unconscious so the brain could heal, if you will, that seems to have worked. If Europe doesn't mess us up, it looks like this road to recovery really may be well on the way. So we're crossing our fingers. Share prices are higher. Yields are moving up a little bit. Healthy things are occurring. We continue to think that it's not a time to take on undue risk, particularly given the world situation. Good, strong companies with good dividends and strong balance sheets make most sense to us for our clients. Hope you have a great weekend. For Farr, Miller in Washington, I'm Michael Farr.